Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Tuesday the 20th of November 2018. I'm Darren Sinden and you can follow me throughout the day on Twitter by using @ds_Pepperstone. Right, let's kick off as ever with a look at the overnight changes and price moves to be aware of. Now, a relatively quiet session on the world's foreign exchanges yesterday. Still one or two important moves to flag nonetheless. First of all, the rally in the euro appears to have come to a halt, trading at 114.46.40 shortly before we recorded the video. It's actually off the top, down by around 0.04%, but doesn't seem to want to be rallying anymore for the moment. And speaking of rallies that have faltered, it's a similar story as far as the Australian dollar is concerned against the US dollar. 74.40 trading down by 0.26% over the last 24 hours, so back below that key 73 level, although it's well supported underneath here and could rally further. In terms of other movers, the South African Rand, well, remember we talked about that yesterday, how that had been the best performer of the trade and commodity related currencies over the prior week. That's given back ground against the US dollar as well, slipping by 0.52% against the greenback. Dollar index for its part, now despite the euro halting in its tracks, that's down at 96.22, barely moved over the last 24 hours to the upside, and of course looking more likely to test 96 now than test back above 97 as things stand currently. Of course that can turn on a sixpence, and it was a poor day again. I think that's a fair description of the trading in Bitcoin and Ethereum. Bitcoin down by 3.3%, Ethereum off by a further 5% in yesterday's trade. Okay, what's on the calendar then? Events that may move the markets today. A pretty thin calendar as far as high impact data is concerned, but still, again, some points of interest to be aware of. This, firstly, we'll start with the news that it's the turn of European finance ministers to meet in Brussels today with a meeting of the ECOFIN group, following on from yesterday's Eurogroup meeting. We've also had out already this morning the minutes from the Reserve Bank of Australia's most recent interest rate meeting, and we'll have more on that in a moment. To come at 8:20 this morning GMT, we'll have a speech from the Reserve Bank of Australia's Governor Philip Lowe, the first of the day's central banker speeches. And then at 10 a.m. we'll hear from Bank of England Governor Mark Carney as the Bank of England reveals its inflation report to MPs in Parliament. There's a bit of a break then until 13:30, and we cross over the Atlantic for US housing starts and building permits for the month of October, and we'll have some more info on the US housing market momentarily. Then at 1500, the next of the day's central banker speeches, and this one from outgoing Bundesbank President Jens Wiedmann, who will be speaking, as I say, at 3 p.m. GMT. And then at 1800, the last of the day's speeches and the last of the high impact items for the calendar today, the Bank of Canada's Wilkins will be giving a speech then. Okay then, breaking news and comment that's caught my eye overnight. And first of all, the Reserve Bank of Australia minutes showed that the bank believes unemployment can fall further and that the economy can grow above trend over the next 2 years. However, the bank remains cautious about monetary conditions in the country, and though they admit that the next rate rise was more likely to be up than down, they didn't suggest that was coming any quicker than we previously thought. Confidence among US house builders fell to its lowest level for 2 years yesterday. The NHAB index came in at 60 versus forecast of 67. And that obviously registering a larger than a 10% drop, as affordability in US housing hit 10-year lows, and that's the real concern here. Can the US consumer now actually afford to buy new houses? Meanwhile, the EU will set out its stance on post-Brexit negotiations with the UK today, I should say, covering topics such as trade and the transition period, and the tone and nature of these guidelines from the EU will obviously weigh quite heavily, or not, on Theresa May, as the case may be, but I suspect the EU are not likely to give her an easy ride. Okay then, time for food for thought and something for you to take away with you into the trading day and beyond. And why not think about this? Trade talks between the US and China have fallen out of the headlines of late, but there is still potential for the US to impose blanket tariffs on all China's imports and vice versa. And that will be bad news for China, and for their US customers, but probably beneficial to other Asian economies, according to Nomura, the Japanese investment bank. And Nomura here has ranked those economies that it sees as benefiting from heightened US-China trade tensions. It sees Malaysia as the biggest potential beneficiary, followed by Japan, Pakistan and Thailand. And Vietnam apparently will be the slow burner, most likely to pick up additional offshore manufacturing if goods are moved away from China to avoid US tariffs. Right, please take a moment to read this risk warning. Trading CFDs and foreign exchange on margin can be a risky business. If you're in any doubt about those risks or the suitability of leverage products for you, then please do contact your Pepperstone account representative. And can I ask you to read this risk warning thoroughly while you're here? Thank you very much for your time today.